The JSE is poised to welcome an exciting new entrant onto the main board today with the highly anticipated listing of Ascendis Health in the pharmaceuticals sector. Carsten Wellner, Chief Executive of Ascendis Health, joins us now for more. Carsten, I'm sure you had a good morning this morning, blowing the kuduzela.
Yes,
we can
and
call
it was exciting. Of course, with my German background, being a soccer fan, to blow a vuvuzela was not an issue at all. And the kuduzela goes more or less a similar way.
So no splatters of
no splatter. Everybody was happy. They didn't have to have a backup team to actually blow a kuduzela.
Oh, that's good.
So it was nice.
A positive day overall.
Yeah, no, definitely. It comes after many months of preparation, years of actually planning and strategizing, getting the right companies together, building our company in health and care. So it was quite an exciting milestone for us to really start a track record for us in the public space.
You mentioned years of preparation there. Just how long have you been planning this listing?
The founders of the business had this vision probably in 2007, 2008. They started looking at the market, looking at potential targets. And yeah, when you are in acquisition, have an acquisitive strategy, the targets don't come overnight. It takes some time to actually convince sometimes these entrepreneurs and family-owned businesses to sell your business. So sometimes it takes 2-3 years actually to get one of these companies on board. I joined 3 years ago, and we always had this vision of building this integrated health and care company, which we base on 3 areas: on animal health, plant health, and human health. And in human health, we have 2 divisions: a pharma med division and actually a consumer health division.
Just on the pharma med division, you mentioned this morning in a cautionary announcement that you are in talks to hopefully bulk up that pillar of your operations.
Yes.
And there's a potential acquisition that might take place that will contribute very positively to your numbers. I know you can't go into details, but just exactly what is that in line with?
It's a specialized medical device business, so it doesn't look at consumables, it looks really at explainable products where you have to have technicians, you have to have service departments, you have to have a lot of technical expertise in the background, which makes the business a little bit more resilient, defensible, that not you losing your agency. Because as we know, medical devices, 95% are imported in South Africa, so you are actually importing products from principals all over the world, Europe, US and Japan. So of course you don't want to lose that agency. So for that side we're looking at not the consumables in that area, but rather the explainable products, more the high-tech products in the medical device business.
You say high-tech. What are the current trends regarding technology in healthcare? Because I'm sure in South Africa we're lagging behind.
Yeah, trends in healthcare is probably, of course, we are not a research company developing chemical new entities, but a lot of is looked actually at the delivery, drug delivery, also raw materials, consistency of raw material imports. It's quite important, as with some areas there is price fights for getting cheaper raw materials in. How do you manage actually to have still the same consistency in the raw material? And for example, our company Solal, which is in the nutraceuticals anti-aging area, they have been very clear and dominant and clear strategizing over years that they have good GMP manufacturing in the background to actually produce their products. And I think that's very important. So the trends go very much into the drug delivery, into the safety of the raw materials, but also the safety of the products. And the government is actually tightening the CAMS regulations at the moment, the CAMS complementary alternative medicines, in order to give that safety and that efficacy and safety to the consumers, to the people in the market.
As I understand, that's one of the challenges that you've highlighted in your prospectus, challenges to the operating environment, and that might have a negative impact on pharmaceuticals. And another one that you've listed is the new changes to the BEE codes. How exactly will that negatively impact a pharmaceutical like yourself?
It will not really negatively impact. It will impact us. We will have to get our act together. We bought a business who had a higher BEE rating than we have. With the new codes, we have to look at that we actually get our BEE rating up. Fortunately, we could actually attract one of the investors, the Mine Workers Investment Corporation, into our shareholders. So we have done the first steps. We have another BEE group from Durban actually in our group with a minor shareholding, and we will increase that. And we will look actually at the new codes and the scorecard to fulfill the areas. Of course, in business development and social responsibility, it's sometimes easier than in a a public listed environment onto the ownership, because we are dependent very much who buys our shares on this open stock market. But nevertheless, we will take this as a very important step going forward, because some of areas we are in public tenders, in government tenders, and we need, of course, and also from a transformation point of view. We're living in South Africa, and even if my accent is not very South African, my wife is South African, my daughter sings and dreams South African, so I'm very aware of the needs in regard of transformation in our country.
And acquisitions, you mentioned in your prospectus that you've got several of them lined up, but we could see 3 or 4 being wrapped up by next year, June. Are you looking at any acquisitions in South Africa or even on the continent?
Yeah, it's a good question that you asked. We have actually an acquisition, also one in Europe at the moment we're looking at, but most of our acquisitions, we look at the low-hanging fruit, and that's in South Africa and for the African continent. Some of our businesses are exporting already 50-60% of their business to Africa, and one of our skin care products, the Nimu brand, exports already even to Europe, to Australia and to Canada. So they're already nicely internationalizing their business, and some of our businesses have a lot of internationalization potential, because brands like Solal, Evox, SSN and Effecto in the phytovet area, they are South African brands. They are good South African products which we can take overseas and make a success out of them.
Taking a look at the table of comparison that you had in your prospectus, it seems as though you're a lot closer to players like the Letha Healthcares as well as Cipla. You've got a long way to go before you can catch up to the likes of Aspen and Adcock.
That's right, but we are aiming for the stars, and we want really to catch up there. When you look at our business, it's from a composition point of view, how we have structured our business from the products point of view, very similar to an Adcock, but we are very entrepreneurial, and what we are combining and what we think is our success so far is corporatization with entrepreneurship. So we don't want to over-corporatize the entrepreneurs, the brand leaders who build these fantastic brands in the South African market, but at the same time, of course, tick the boxes on corporatization, on corporate governance and so on. Yeah, and I think Cipla unfortunately has delisted, so it's at the moment it's Adcock and Aspen to catch, and yeah, guys, watch out. I think we will come.
Oh, okay. We'll come back in 5 years' time and see how things change maybe in the pharmaceuticals landscape.
I would love to talk to you earlier even.
Definitely. But coming back to the decision to decide to list on the Johannesburg Stock Exchange, what's the setup with the previous shareholders? Have they all sold off their stakes, or
no,
are they coming on board?
They are still exactly in their of course, they reduced their stake. They sold more or less 2% of their shares, which is minute. They had to settle some of their own debt. It's 2 gentlemen in the Coast to Coast group, and they actually are fully committed mid to long term to actually grow that business. And we got very nice offers actually before going to the JSE not to list as a private investment, and they refused it. We refused it because we think we need the public. Sorry? Was it CFR by any chance? No, it wasn't. But we actually want to stay in the public, so we want to be in the public space to get that credibility, that track record. Because sometimes when we go to little entrepreneurs who have grown their business very successfully, but they're coming to that level where suddenly the growth, what is the next step? What are they doing the next step? And we can offer them, like I said, some corporatization, but not too much. But at the same time, being in the public listed environment, they can suddenly trade shares. So they actually sell their business 100% to us. They get some shares in Ascendis. Some of the guys actually invested all their sales proceeds into Ascendis because they believe the story and the strategy we actually are running after and what we want to achieve, that integrated health and care company. So from that side, it's important to be a public listed company from a credibility point of view, and also to tick the corporate governance boxes, which is important.
Carsten, you've got lots of ambition, and we look forward to speaking to you again, maybe in a couple of months' time or a few years. But that was Carsten Wellner, Chief Executive of Ascendis.